My name is Sanoop Sashindran. I am a product lead at FinBox. So I am going to talk about an interesting topic, which is around balancing your risk and borrower experience for the new age digital lending. And I know it's been a long day. I'll try to keep it less text heavy and a lot of talk. Instead, what I have for you today is a live demo of the tool along with an outline of what it is all about. So yeah, without further ado, I'll just start with the presentation. Right. So the lending, as we know, has evolved over time. There was a time wherein we used to go to the banks to get anything done, and through various generations, as you can see earlier, second generation is when they used to send agents to do the operations for you. Third generation is when the banks developed their own web application for online, banking. And fourth generation is where most of us are right now, wherein we integrate with third-party APIs to, add more insights, do a lot of partnership, and make your digital journey smoother. And the latest generation is where RBI has come up with a framework, a protocol for standardizing your digital lending. Now, lending itself is a quite complex operation, and traditionally what we have noticed is that it is quite fragmented internally. What I mean by that is you have separate teams responsible for certain actions. So the entire operation is carried out in silos. Now, silos might be a good thing, but it has its own drawbacks to it. There are multiple silos, as you can see. There is a LOS team, there is an LMS team, there is a KYC, underwriting. Now, when you move into this new generation of lending, which is fairly digital, you need to have the ability to tweak certain things between these silos and be able to communicate or get a 360 view of the customer. Now, these are the inefficiencies that we've seen when you operate in silos. It is hard for you to make quick experience changes for your borrowers. It's hard for you to get a 360 view. It's hard for you to do partnership lending. Like if you want to maybe partner with PhonePe or Paytm to increase your demography. It's hard for you to do this because there is a lot of heavy lifting that has to be done all over again. Yep. So let me put forward a case. Why do you need a centralized unit or a system that can help you communicate between these silos efficiently? So just few examples to say. Your customer experience or the steps that a borrower takes pretty much defines the kind of borrowers you would be getting in your portfolio. Now, what I mean by that is if you have a very tightly knit journey, let's say 10-step process, you might end up filtering out your premium customers because they don't want to have a high touch journey. They would want to do 2-3 steps and get a loan offer because that is what they're getting from your competitions. And what you end up with is a very desperate segment of borrowers, thereby affecting your quality of borrower pool. Another example would be your operation. Since you're doing a lot of third-party integrations, it adds a lot of cost. You're doing this to add more insights to your borrower, and if you're smart about it, you can reduce your operational cost by funneling it out efficiently. Like you need a workflow that can help you funnel that. I would want to collect bank statement only if, let's say, a person is serviceable and has a decent bureau score, to say. And a few more examples are around partnership strategies. If I have done an integration with, let's say, PhonePe, I should not do all the heavy lifting again to maybe do it with Paytm or any other anchors. So you need to have a system that is able to take these silos and connect together and help you migrate to new environment or new scenarios faster. Right. So traditionally, we have seen BREs are mostly used for your credit policy, and with this new age of lending, You need a business rule engine which is more than just your if-else logic. It should look beyond credit policy, and it should focus on these three pillars, which is how you can structure your borrower experience, how you can build a scalable partnership model, and how you can dynamic price based on your demographics. Uh, Now, this is where we want to introduce Sentinel, which is the business rule engine that we have built based on these gaps that we have identified. Just to give you a bird's eye view of how this tool looks like, on the left you have your system which sources leads to Sentinel, and we've built the tool keeping in mind that the primary users here are your risk managers, and we want to segregate the control out of your tech team, or making any change in policy or journey a very tech heavy exercise. We want to give the control over to your risk managers who are pretty much drafting these policies. So if you see here, your risk managers are the primary persona who pretty much control how you're supposed to use this platform. It's not a tool, it's basically a platform wherein you can define your loan products, your different generations of lending, and you can create policies, borrower experience, insurance, all whatever use case you would want to cater to. And there is a warehouse where your data science team can derive analytics from. Now I have a quick video to just wake you guys up. Uh, me- okay, so this is a video which we use to launch Sentinel. It pretty much outlines what features we have and what are the pain points we are solving. Post this video, we'll go into a live demo, and I'll showcase you how we are solving a very simple but real life use case using the tool. Great. Oh, you've seen my YouTube suggestions, I guess. Right. So basically, I think our marketing team has pretty much showcased what they are capable of. Now, let me take a step back and show what an actual product look like. So before I jump into the live demo, I would like to showcase you a use case. Then we'll look into the policy that has been constructed. Let's say I am an NBFC who wants to venture into a new demography where I would want to run some bureau checks, and based on these bureau checks, I would want to give an offer to the customer. Also, I would want to control the journey. Basically, I would want to let my premium customers go in without any pain points, whereas a relatively riskier customer would have to go and do some additional steps. Let's say that is a use case which is a pretty practical use case. Uh, so the way we look at policies in Sentinel is in the form of a workflow. So if I just give you an overall view of it, this is how you would structure your policies. It's a very simple policy for the use for this demo, but you can make it as complex as you would wish. Right. So the first thing that you do is select what kind of sources you would be using for your policy. So right now I want to do a bureau check, and I want to just check if the person is in a serviceable PIN code. So, but along with this, you have an option to add banking-based parameters, device-based parameters, or GST-based parameters. And there are some additional features wherein you can connect your own, let's say you have built your own scoring models and you want to reuse that here instead of rebuilding again. You can just enable those APIs directly on the platform. And whatever master tables you have, like pin code, city tiers, all of that can be added here, and you can use them. Once you have added your sources, you would then go ahead drafting what are the rules that you would want to have in this policy. So if I want to, if these are your basic bureau derogatory checks that you add, yeah, I think there's something wrong. Yeah, the demo gods have not been kind to me. Okay. So let's say you have some derogatory checks that you want to do on top of bureau. It's very easy for you to just switch this on. Yep. It's very easy for you to create a rule here. Let me go ahead and add a rule. Let's say I want to check if I have done inquiries. Inquiries. I can't see the screen. Yep. Inquiries are, let's say, less than 10. Now you can go and type bureau dot inquiry, and you'll see here we have parameters that are readily available for you to use. Let's say I want to see inquiry in last 30 days, should be less than 10. So this is how easily you can write a rule, and most often in an underwriting policy you end up tweaking your bureau parameters and your thresholds. So with a tool like this, with an interface which is very similar to your Excel functions, you don't have a tech dependency here. Your risk team can pretty much make changes by themselves. So this is how easily you can add a rule, and once you have defined your rules, you can then further control, once all of these rules are passing, what is it that you would want to do. So let's say I want to, if all the rules are passing, I want to do an income check. So let me just focus on this block here. Yeah. Okay. So this is the step where I want to control the customer touch point. Let's say I have an income which is greater than 60,000. I want to flow the customer further into offer calculation. But if I don't have sufficient income, I want the customer to upload his or her bank statement, right? So I can define what the customer should do based on the outcomes that I define. So here I have a simple income-based check. Now once my income checks are satisfied, I can go forward and do my offer calculations. Now these two blocks here are what is doing your offer-based calculations. First is your interest grid is defined here. So if I just open this, yeah, if you see here, my interest is a function of bureau score and income. I hope it is visible. And you can create your own grids wherein, so here if I want to read this out loud, if my bureau score is greater than 800 and my income is greater than 80K, I will get an interest of 12%. So that is how you can create your own scenarios. You can add more variables to increase the complexity, but pretty much this is the interface that your risk managers would use to change your pricing. And when we go into offer calculation, if you see here, it's pretty common calculations done here. You have a 10-year EMI, and if you see the way amount is calculated, it is very much similar to the way Excel formulas work. So there is a way to write code on the platform, but we have made it in a way that your risk managers can do it themselves. And once you write your own computations, you have then the option to control what would happen once you get an offer. So let's say in this use case, if I'm getting an offer greater than 2 lakhs, I want to give that as a final offer and end the customer journey. if I am getting anything less than 2 lakh, then I want to give the option to the customer to boost it by maybe doing a GST or a bank statement again. So this pretty much gives you a bird's eye view of what the policy is, what the tool is capable of, and there are, because of lack of time, I cannot go deep into the demo, but there are multiple use cases that get satisfied. So few of our lenders are using it other than the underwriting policies. It is also used for borrower experience. It is used for your partnership strategies. It is used for cases as to when to auto disburse a loan, how to do your KYC checks, right? And the impact that has been, the impact that lenders who have used this tool has been quite significant. Earlier, it used to take uh, around 4 policies to go live. It used to take at least a month because of the tech dependency to test it, iterate it. Now there are around 12 policies going live in a week, which is more than a policy a day. So that is the scale at which our lenders are able to operate. And at the end, I have a small offer for you guys. Yep. So we have this free workshop that we're organizing for people who want to, maybe try out this tool. So you can reach us out at this email ID, and we will connect with your team and try to get to understand what use case you have, and we'll see if the platform fits in well with you. Um, yep. So that's all the time I have. Thank you. If you have any questions, please do let me know.